Welcome back to Talk Tickers. It is Thursday, January 29th, 2026. Hope you're all staying safe out there.
We are diving right back in.
We are. Today we're talking about the company that is really the arms dealer for the entire AI build-out. We're talking Lam Research, ticker LRCX.
That's right. They're the ones building the machines that build the chips. Their Q2 earnings just dropped yesterday afternoon, and it's a really interesting one.
It is, because you have this perfect setup, right? The AI demand is just completely off the charts. Everyone knows this.
Yeah, NVIDIA can't make chips fast enough.
Exactly. So you'd think Lam, who makes the critical tools, would be, just crushing it. And the numbers say they are, but the stock
basically went nowhere. It was muted.
Muted is a polite way to put it. A 1% move after a beat and raise.
Yep.
And that's our whole mission today. We need to get into the why. Why does a company drop record numbers, record margins, and guide up, and the market just shrugs?
It's the curse of high expectations.
Yeah.
I mean, when a stock has run up like this, great, just doesn't cut it sometimes.
So let's just lay out the numbers first. Get the facts on the table. The headline revenue number was what? $5.345 billion?
It was an all-time record for them. And that beat consensus by about $130 million. So, it wasn't a squeaker.
Not at all. And then the bottom line, the earnings per share.
Also very strong. Non-GAAP EPS came in at $1.27. The street was looking for something like $1.16.
So an 11-cent beat, that's solid.
It is. And look, the margins are the real story here. Gross margin at almost 50%, 49.7%.
Right.
And operating margin hit a record 34.3%.
That tells you they have pricing power.
Oh, absolutely. They are not discounting these tools. Customers are lining up.
And they even guided up. For the March quarter, they're pointing to $5.7 billion in revenue, EPS climbing to $1.35.
I mean, a few years ago, a classic beat and raise like this would pop the stock 10%. Easy.
Right. But let's look at the tape. It closed around $2.39, and in after hours, it barely ticked over $2.41.
A 1% move.
Yeah, and the options market was pricing in like a 6% swing. Volatility was crushed, so what gives?
Okay, so it all comes down to one core theme from the call. It's not a demand problem. It's not a Lam problem. It's a construction problem.
The clean rooms.
The clean rooms, exactly. CEO Tim Archer said it over and over. He said, wafer fab equipment spending, WFE, is going to $135 billion this year. Massive number.
Okay.
But he basically said, we can't ship our tools because our customers don't have the buildings ready to install them.
I think we need to pause on that because supply chain constraint is such a generic phrase now.
It is, but this is different.
This isn't about not getting a tiny component. This is like, we bought a new car, but the garage hasn't been built yet.
That's a perfect analogy.
Yeah.
And people don't realize how complex a modern fab is. This isn't a warehouse.
No, a class 1 clean room. It's like a hospital operating room the size of 10 football fields.
It is. The air filtration systems, the vibration dampening foundations that go stories deep into the earth. You need power plants, water recycling.
So when Lam says clean room constraints, they mean TSMC and Intel are literally behind schedule on pouring the concrete.
That's it. And Lam, for their part, is ready. They said they've doubled their own manufacturing capacity. They have new automated warehouses, a new factory in Malaysia. The tools are on the loading dock, ready to go.
But the customer is on the phone saying, don't you dare ship that $10 million machine. We have nowhere to put it.
Right. Leave it in the parking lot and it's ruined.
Which, if you're an investor, is just incredibly frustrating. It pushes the whole story to the right.
And that was the key phrase on the call. Second half weighted. All that growth is coming, but it's coming later in the year.
So the market is basically saying, call us in 6 months. The demand isn't gone. It's just deferred.
It's a bottleneck, not a cliff. That's the key.
Yeah.
If orders were being canceled, the stock would be down 20%. Instead, it's just flat. The market believes them, but it hates to wait.
Okay, so while we're all waiting for the concrete to dry, let's talk about what's going inside these new buildings, because the technology shift is enormous. Let's start with gate-all-around, GAA.
This is the biggest change to how a transistor is built in, more than a decade?
Okay, break this down for us. We're going from FinFET to GAA. Why does that matter for Lam's business?
So a FinFET, just picture a little silicon fin sticking up. The gate, the on-off switch, wraps around 3 sides of it.
Okay.
It worked for years.
Yeah.
But as we get to these tiny nodes, it starts to leak electricity.
Which means your phone gets hot and the battery dies.
Exactly. So gate all around, instead of a fin, it's a stack of super thin sheets like floating pieces of paper. The gate material wraps completely around all sides of every sheet.
All around. Got it. More control.
Perfect control. But building it is a nightmare. Before, you just etched from the top down. Now you have to etch sideways in between those sheets to remove material without the whole thing collapsing.
It sounds impossible.
It's incredibly difficult. And Lam has a specific tool for it, the Acora etch system. And on the call, they said the installed base for Acora doubled year over year.
And they put a dollar figure on this transition, didn't they?
They did. This is the wild part. For every 100,000 wafer starts per month that transition to GAA, it creates about $1 billion in incremental market opportunity for them.
$1 billion in extra business just from the complexity.
Yes, more steps, more complex machines. And because their tool is becoming the tool of record, the industry standard, they're locking in that revenue for years.
That tool of record status is such a deep moat. No one's going to risk their entire fabs yield to switch vendors and save a couple of bucks.
Not a chance. You don't swap out the engine mid-race.
Okay, let's move from the transistor to the package.
Yeah.
Advanced packaging used to be the most boring part of the industry. Now it's everything.
It's where all the performance gains are happening. You can't make a modern AI chip without it. We're talking high bandwidth memory, HBM.
Stacking memory chips on top of each other.
Right. And we're moving to HBM4, which could be up to 16 layers high. And to connect them, you can't use wires. You have to drill tiny high-speed elevators for data right through the silicon itself.
Through silicon vias or TSVs?
Yep. And you need to etch those holes perfectly, then fill them with copper. That's called electroplating.
And Lam is the king of electroplating.
Dominant position. They said their advanced packaging business is set to grow over 40% in 2026.
40%. That's way faster than the overall market.
Way faster. It's all about intensity. The number of Lam steps per wafer is just exploding.
There was one other area that seemed to be coming back from the dead, NAND memory.
The sleeper hit.
Yeah, NAND has been a terrible market for like 2 years. But the CEO sounded really bullish.
He did, and it's because of AI inference. We always think about fast DRAM for training, but the AI models themselves are just enormous files.
Right.
And when you're actually using the AI, you need to access that massive library of data instantly. You need high-speed storage.
So it's not just the brain, it's the library the brain needs to read.
That's it. And they gave a metric. For every 2 to 3 million AI accelerators sold, it drives an incremental 1-point increase in total NAND bit demand.
That's a powerful link. Buy a GPU, you have to buy the storage.
And Lam has a specific tool for high-density NAND, their Molly ALD system, that's gaining a lot of share. So if the NAND market really turns, that's a whole other tailwind for them.
Okay, so we've got the tech. Let's look at the map. Geographically, there was a big move in the China numbers.
There was. China dropped to 35% of revenue. That's down from 43% just a quarter ago.
That's a big drop. Is that the export controls finally biting? Should investors be worried?
Management said they expect China revenue to be flattish in dollar terms this year. So as the rest of the world grows, as those new fabs in Ohio and Arizona come online,
China just becomes a smaller piece of a much bigger pie.
exactly, you dilute the risk. But it does impact margins a bit. They said the gross margin dip was partly due to this mixed shift away from the higher margin China business.
Right. Less competition there.
But it's a much healthier business long term.
I agree. Now, let's talk about what management did with their money, because their actions spoke louder than any forecast.
Oh yeah, the buyback. They bought back $1.4 billion of stock.
But at what price? What was the average?
$154 a share.
$154. And the stock is at $240 today.
I know.
That is just an incredible trade. They were backing up the truck a few months ago when everyone else was panicking.
It just shows you what they were seeing in their order book versus what Wall Street was modeling. They knew the demand was real.
And they still have over $5 billion left on that authorization.
Which puts a pretty solid floor under the stock. If it does pull back because of these delays, you know the company is going to be a buyer.
So let's put it all together. You have flawless execution, massive tech tailwinds with GAA and packaging, huge buyback support, but a construction delay. What's the final verdict?
The verdict is that the easy money's been made. You know, the 200% run is done. Now it's an execution story. The stock isn't cheap anymore.
So the bear case is simply, what if these delays last longer?
Exactly. What if second half 26 slides into first half 27? The market will not be patient with that.
And the bull case is that this is a coiled spring.
It is. The demand isn't going away, it's building up. And when those fabs open, You're going to see a flood of orders. They're gaining market share right now. They just need a place to ship the tools.
It's a test of patience, really.
That's all it is.
All right, I think it's time for the segment that gives our lawyers heartburn.
They're already on the phone.
It is the "This is not financial advice" segment. A reminder to everyone, we are not your financial advisors. Please do not do this with real money. We're just having some fun. So what's the trade?
Okay, my trade is called the Cleanroom Contango. The whole thesis today is that the bottleneck isn't the tools, it's the buildings. So you don't buy Lam. You don't buy the chip makers. You go long the boring industrial engineering firms, the guys who actually build clean rooms and install the HVAC systems.
The guys with the blueprints and the HEPA filters?
Yes. If there's a global shortage of clean room space, who has all the pricing power right now? It's the contractors. They can name their price.
I love it. It's the ultimate picks and shovels play, but you're buying the company that makes the shed to store the shovels.
And to make it a pairs trade, you short the chip makers for the next 3 months.
Ooh, spicy.
Their capital is stuck. They're burning cash on these half-built factories with no revenue coming in. You play the builder against the buyer.
The logic is sound. I have a dumber, but maybe more profitable idea.
Let's hear it.
You forget the stock market. You buy a small plot of land across the street from the new Intel fab in Ohio or the TSMC fab in Arizona.
Okay.
And you don't build anything complicated. You just pave it and turn it into a premium parking lot with a couple of food trucks.
A food truck park.
Think about it. Thousands of construction workers on triple shifts, they're starving, and they have nowhere to park their F-150s. You charge for priority parking and sell $18 burritos. It's pure cash flow from day one.
That might be the single best trade idea we have ever come up with on this show.
Immediate ROI. But again, listeners, do not do this. Or if you do, you owe us a burrito.
A very expensive burrito.
All right, let's land the plane. Lam Research. Record quarter, great guidance, but the stock is in a holding pattern.
Yep. The growth is coming. It's just delayed by a few months. The tech story is stronger than ever.
The leading indicator here isn't earnings reports, it's construction reports. When you see a headline about a new fab opening its doors, that's the real starting gun.
That's the signal for the next leg up. Couldn't have said it better myself.
And that's our time for today. This is Talk Tickers. Keep your stops tight and your research deep.
Thanks for listening, everyone.